What's happening with the US economy and how is it affecting the stock market? Well, there's been a recent decline in US stock indexes, including the S&P 500, Dow Jones and Nasdaq. This dip was triggered by a weaker than expected report on US services industries, and there's speculation that President Trump's tariffs may be a contributing factor. But let's not get caught up in doom and gloom just yet. Despite these concerns, there's a silver lining. Hopes for Federal Reserve interest rate cuts and strong profit reports from US companies have helped balance the scales. Companies like Palantir Technologies and Axon Enterprise, for instance, are reporting robust profits, demonstrating resilience and growth potential. So it's not all bad news. There's a bit of a tug-of-war going on. On one side, we have factors pulling down the stock market, like the weaker report on services industries and potential tariff impacts. On the other side, there are forces pushing it up, like the prospect of interest rate cuts and strong corporate profits. So, in essence, it's a mixed bag, with some discouraging signals balanced out by potential positive developments. But what does all this mean for individual companies? Well, let's delve into that a bit. Companies like Edgewell Personal Care have reported lower profits. They're attributing this to weak sun care sales and the impact of tariffs. It seems trade policy and tariffs are common concerns among US services businesses, but it's not all doom and gloom. Despite the looming tariff threats, investment in artificial intelligence technology shows no signs of slowing down. Companies like Palantir Technologies and Axon Enterprise are reporting strong profits. These companies are proving that innovation and forward thinking can still thrive, even in tougher economic climates. It's clear that the current economic climate is having varied effects on different sectors and companies. So what can we expect moving forward? Well, the stock market's recent surge to record highs has created significant pressure on companies to report increased profits. This pressure is tangible, and it's forcing companies to strategize and innovate in order to stay ahead. Expectations for a Federal Reserve rate cut in September are on the rise, following a US job market report that didn't quite meet expectations. This potential rate cut could make stocks appear more attractive to investors, but it's important to consider the flip side. Lower interest rates could also lead to higher inflation, which is a factor that could influence the future trajectory of the economy. Moreover, Treasury yields have seen a decrease, indicating that investors are leaning towards safer assets. As for global stock markets, the performance has been mixed, reflecting the complexity and diversity of international economies. In conclusion, the US economy and stock market are experiencing some turbulence, but there are also signs of potential positives on the horizon. The future is not set in stone, it's shaped by the actions we take today. So, let's keep our eyes on the horizon and navigate these economic waters with care and caution.